Hey guys, this is FOMO No Mo on Telegram. Also, Steven from The Happy Profits, where it's the right place to learn how to place the right trade. So yeah, I'm going to go over the third law of trading during these 25 days of Christmas, and basically it's going to be the third law of trading. Now, the third law of trading is the easiest, but it's also the hardest to do. It's called revenge is best not served. So do not try to revenge trade. In trading, emotions are the biggest enemy. When losses pile up, it's natural to feel frustrated or even angry. But there's one law you must always remember. Revenge is best not served. So today we're going to break it down why revenge trading is so dangerous and how to avoid it. So the first one is you're going to find yourself doing stuff like this, crazy stuff where you're making silly decisions and you're getting angry at the computer. And it's not the computer's fault. It just might have gone against you even if you made the right thing. Now, if you're just randomly clicking, that's on you. If you're not taking a smart approach to your work, and this is your work, you're just trying to figure out how to print money. And how to print money, you have to be more intelligent or as intelligent as the people you're playing against. So the first thing is you want to sit there and go, look, revenge trading is going to happen. And it basically happens when traders impulsively place larger and riskier trades to recover losses instead of following a well thought out strategy. The emotions take over. The focus shifts from calculated decisions to making a desperate need to win back losses. Some people aren't even happy when they break even. It's crazy, but I've seen it. I even seen it today. So basically right here, the next thing is you want to be the emotional trader or the calm trader. The calm trader has calculated plans. I know these aren't the best pixels. I don't care about being good at YouTube. I just care about giving you some useful information. So the best thing to do is impulsive trades after losses. That's what revenge trading is. It's also larger position size, that you keep increasing the larger positions on the way down. You might have seen some YouTube videos where people are just making bigger things. I've done it in roulette before. Every time I lose, I put another chip. So eventually I'm ahead of the trade. And it could eventually just keep going against you. And the worst and probably the best you can do is break even. So take a little loss and maybe just reevaluate the trade to take a proper trade and a proper entry with your money that you're trying to get location freedom or financial freedom, which eventually will be location freedom. Ignoring rules and risk management. Once you start getting angry, you just start throwing it all out the window and you just attack. But here's the truth. The market does not care about your emotions. It is a neutral entity, and it's forcing you to take trades after you deepen your losses. That's where you just got to cut it. And if you don't cut it, take profit stop losses, make a plan, maybe make a little stop loss a little lower than normal, but you have to just say, that's the plan, and that's what I'm doing. Now, if the plan starts going up, you can slide your stop loss up, but I would advise you not to slide it down. Locking in profits is different, but your plan, you got to hold the plan. So here's the psychology of basically behind the revenge trading. So what you're going to do is you're going to find out that revenge trading is basically, I have to get out of this presentation to get my thing up. It's basically, revenge trading is driven by frustrations, anger, fear of failure, fear of missing out, the FOMO. Why do you think I named myself FOMO No Mo? To get over it. This emotional spirit distorts your judgment. Instead of sticking to your plan, you chase the market and break your own rules. Rules are there for a reason. You have figured out, if I follow these rules, I tend to be more consistent. And now you've thrown those out just because you're angry. Take a 10-cent loss, not a dollar loss on a share. And if it starts to retrend and you have that confirmation, that is better. Because mainly you're probably going to be chasing if you are losing when you are longing. So, the visual is to see this down spiral chart and you keep doing it and you keep showing you're making poor decisions and then you go, well, look, I should have looked at this. I didn't look at anything. And that's when you threw it out with the emotions. So the result, you had more losses, you reduced your confidence, and you grow your urge to get even, which only snowballs into further mistakes. So how to avoid it? Well, you have to accept losses as part of a trading. I do not like losses. Trust me, I'm the worst one. I probably don't profit as much because of the loss, but it's all good because I take my calculated trades, I take what I deserve out of the market, and then I keep looking and refining my strategy about how long to hold a stock. But we've seen a lot of these go against you very fast, and you go large positions. So larger positions, I go for less money. Smaller positions, I go for more money. I mean, that's just a pure fact, and eventually I'll get mentally to take the large order and hold it. I get it, but I'm comfortable with what I do. I'm happy there's a trader in our room, Nurse Donna. She leaves when she has her profit and moves on. That's one of the biggest things. I have friends that call me all the time, like, why am I trading right now? I was like, I don't know, just close it. But it's only 300, close it. But it's only, close it. It's like, why? If you call me, I actually click out of every position. So that's part of my thing. But basically, one, accepting losses is part of trading. That's very big. First, accept that losses are part of the game. No trader wins every time. I had a couple reds today on Xena when it first opened, and I waited it patiently for the retrend. And I should be patiently waiting for the retrend. That is what I need to do because that's my best trade, is the retrend trade. And see, that's just refining from losses, not sitting there getting angry, just saying, I have my stop loss. I would have lost $2 more down. So screw 30 cents a share. Screw the $60. I would have lost a crap load more. So I was very happy with that decision, and you're going to be a lot happier when you see the stock goes down. And you'll see it go down because that's what you're revenge trading against. So first of all, accept it again. No trader wins every time, and focus on the long term, not the individual trades. You're going to have your bumps in the road, just like when you're a child trying to walk, trying to run, falling when you're crawling, all that kind of stuff just to walk, run, and now hopefully be proficient at something else. 3, trade smaller after a loss. I tell people when you're chasing a stock too, my size is like 1,000 here, and it'll go 500, 200, 100. As it's getting close to the top and it is still breaking highs, my shares go down. Because if I do, it does turn around. It's not going to turn around as bad. So that's part of one of my tactics I just told you. Also, after losing it, smaller size, smaller trades help you keep your capital and regain your mental clarity. The next one is step away from the screen. A good break allows you to reset, reflect, and return with a very clean mind. Remember, the markets will still be there tomorrow, and they'll still be there in 10 minutes. I walk around the block sometimes. I just get out, not that I'm return trading. Sometimes you just need a break. Maybe you need to see fresh eyes. The other thing is practice self-analysis. Reflect on what went wrong. Were you over trading? Did you stick to your exit strategy? No, because if you didn't have a plan, it went down. Also, this self-analysis helps you spot patterns and improve over time. I think trading is all pattern recognition. I trade it even on the small or the large, the same pattern. So that's what I do. But in closing right here, revenge trading is a battle you can't win. So instead of letting emotions control you, focus on discipline, patience, and the bigger picture. Trading success is not about fighting the market. It's about mastering yourself. I've noticed that, and I've put more money in myself with other people's programs to see if my stuff's right, and I know it's right because every time I look, I laugh, and most of the time it's just a different version of saying the same thing. I've also bought Mastermind, Mind Valley, some other classes. If you like them, reach out. I have a couple, and I just try to make myself better so I'm clearer, calmer, simpler decisions all the time. So before you embark on a journey of revenge, Confucius says, dig 2 graves. It means it's not going to work out well for you. So the biggest thing right here is just like and subscribe if you want more trading insights. But the biggest thing is don't revenge trade. Stick to your plan. Set your stop losses, and all those things will make more sense later on when you're still frustrated. Y'all have a great day. Hope this 3rd law of revenge trading, revenge is best not served. Walk away. Have a good one. Y'all have a great one. This is the 3rd law of trading during the 25 days of Christmas. Y'all have a great night.